Hello and welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec Markets on Thursday, 20th of June, looking at euro dollar, which interestingly has had a sharp turnaround. We've seen this across the markets actually with euro dollar. So it's gone the daily chart. Euro dollar having a sharp move higher on the back of that Fed meeting. The dollar weakness is coming significantly through, and I spoke in the last few days about the importance of this 1265 old pivot line, old breakout that became a pivot line. It failed on Monday, Tuesday, Wednesday. It failed on each occasion to really have a breakout above that, but the move today has really come through and gone significantly above 1265 and is now testing 13 big figure. And now it's a really difficult one to play actually at the moment, I think, because the market moves over, I mean, just even back to the beginning of June, have been really fluctuating, higher and lower, and then now back higher again, and it doesn't really suggest that there's any real decisive trend on euro dollar at the moment. You've got these both central banks going pretty dovish now, and subsequently we're seeing the market all sort of rebounding, obviously, with the latter news of the Fed turning dovish. But will that last is the question. I mean, you've got the resistance around 13 big figure. That's an old level of an old key floor. It's nothing decisively strong, but 13 big figure I think is something that obviously the market has in the past had a look at. If I go back here, has sort of been a basis of support in the past and sort of becomes back in again. So I think that's something we need to look at. But obviously 1347 was the reaction high we got from last week, and that is clearly a key line of resistance there. But this rally that we've got in process at the moment, I'll be very surprised if it actually does continue to have traction to the upside and breaking out to sort of above the 1350 level towards 14 figure. I think I'm be very surprised if we don't start to see some sort of resistance coming in overhead, and then subsequently the rally just dissipating again. So it's a difficult one to really play, because at the moment the technicals are still very strong, and you can see that through the hourly chart where the market has just taken off. But how long it lasts for is the question. Momentum indicators aren't stretched by any real means, but they are a bit uncertain in the fact that they've been sort of falling away sharply and then now rising again. So I'm not 100% convinced that would be taken, for example, as a buy signal on the stochastic. So I think it's a market that we need to see settle down first. But for now, I suppose you could argue that the market is still trading higher. 13 big figure resistance is being tested. Wish you good luck in your trading, and I'll speak to you later.